So we are continuing from where the first part of this cash flow video ended. After operating activities, we move on to investing activities. As we can see, what does investing activity involve? I told you initially in the intro of our video that we talk about things that the company has invested in: buying an asset, okay, selling an asset, dividends being received, long-term investment. So, as I said, investing activities, some things that you invested in as a company, okay? So, acquisition of non-current assets, these are very important computations. This one has to always appear, okay? There's a reason why it even appears. You can just gauge from the statement of financial position that, okay, your assets last year figure and the assets this year figure has increased. Just know that there's been what? An acquisition or purchase, in other words. So this one, usually there's a computation because of the fact that you might have sold something in that year and the like, so you just don't get the difference of last year's asset total and this year. That would be wrong because those figures do not include that additional info which they get to put below in your additional information of maybe they sold something. Okay, that's why we just get to put some computation behind that. So let me show you how we got to that figure of an acquisition. So first of all, you get to look back to your statement of financial position because that's where you find non-current assets. Okay, and an asset, of course, is part of the acquisition process that we're talking about, acquisition of non-current assets. So there's an opening balance in 2010, 4996. I hope you can see that. Closing 6158. We said opening is the year before, closing is the current year. So that's we can just say, okay, assets have increased, right? Showing that they've probably purchased something. Now you might just say, why can't we just get the increase there because it's an acquisition which is purchase? Well, we would have gotten that difference, but the thing is that it might give you the wrong picture of your asset value in terms of purchase. You get to consider what they told us, some other further detail that occurred in that year. Plant and equipment, okay, with an original cost of 720 and accumulated dip of 540 was sold during the year. We cannot ignore that. We have to show some computation in that asset account so that we can get an accurate figure of acquisition by obviously taking out this from the totals there, and of course we'll land to the total there. So even as we're going to do that, please check for revaluation if it's there. These are very important things. Revaluation is usually added to an asset or subtracted if there was a loss in revaluation. But look at revaluation. Previous year there was nothing. This current year there is a 90, meaning increase in revaluation. This is what IAS 16, right? For assets. So when you have an increase in your revaluation, debit the asset account. That's why I said we have to really wait before we get to find that purchase figure or acquisition, because there are so many other details that are not in that total that we have to get to incorporate. So let me share now how we'll do all this. So I've opened an asset account. That's why I will definitely get that purchase figure, because it's in an asset account that you get to see whether they've purchased or not. This is still knowledge on those disposal accounts, okay? Then why have we put the closing balance as 6158 on the credit instead of closing it, of course, on your debit, because it's an asset account, debit balances? Well, as I said earlier on, even in my previous example of depreciation, we get to only focus on the carried down part for easier computations in your account, okay? That's why we get to just use the carried down figure and put it on, and not carried down is on the opposite of what an account balance is. There was a revaluation increase. An increase in revaluation is debited to the asset account, and we've shown it. What else have we left? An asset was actually sold from that property, plant and equipment total of how much? 720. When an asset is being sold, what do you do to an asset account? We credit. Knowledge on disposal account comes back here. Then that's all you need to put in the asset account. What are you looking for? Acquisition or purchase. When you're purchasing, most of the time the figure should come where? On your debit, because it's an increase in your assets. I believe the shortage will be for sure on the debit side, and that will be your X that you're looking for, which is 1792. I think that's the figure we even put there. Yeah, if we get back to that original screen, and that's how you get the acquisition figure. That's it. So most of the time, acquisition calculation, they might just give you the acquisition price, or you have to go through this process of getting that same purchase price or acquisition. So if it's not stated, this is our process. Then we get back to the format and finish off the investing activities as stated in the question. So let's pick other investing activities apart from that total we found from acquisition. Things like long-term investments feature under investing activities. Currently, there is a total from 2010 as 1,200. Please follow me on that one. And then 2011, 16. Difference 400. Here we just get the difference for this long term. It is an increase in investments. That's a decrease in your cash. You're spending more. Okay, that's why we're saying it's a decrease at 400. Dividends received, are they there? Those are investing activities. They are there. Which figure are we picking? They're in the profit or loss statement, right? So profit or loss statement, usually we just pick the current charge, by the way, okay? Because this one is just for that year ended. That's why there's even that heading in the profit or loss statement. Yeah, we just pick for the last year ended in the profit or loss. So I'm seeing the 52. That's your received, and the received dividend is an increase in cash. That's how it is. So that's how we get to picture that one. Even proceeds. What are proceeds? Cash that you receive from selling an asset. It's there. You sold, which was sold during the year for 210. Those are the proceeds, what you sold, your cash that you received from selling. And proceeds are increasing cash. And then that's it from what I can see on investing. And you go record like what I've done. Let me just share the screen. We are under investing activities, okay? Acquisition, I've put 1792 in brackets. Why? When you're acquiring more assets, what's happening to your cash? Because when you're looking at cash flow, it's all about cash. You're asking yourself those questions. What's happening to your cash? It's a decrease in your cash when you're spending. It's a decrease. That's why I put in brackets. Proceeds, I said this is an increase in cash. You've received some cash. Dividends received, you've received as well. That's an increase. So if you keep the figure positive. Long-term investments, they were increasing, meaning you are investing more in something. Cash went out of the company. So that's why we've kept it in brackets, that one, long-term investments. Negative 400. We just got the difference for that one. Sum up your investing activities. I got 1930 in brackets, came out as a negative, which you get to add up with the net cash from operating activities. That figure waiting up there, 1486. Oh, it's 1486 minus 1930, giving you 444, negative 444. Start your financing. What is financing activities? Things that you finance yourselves with as a company. Share capital, loans, debentures, okay? Other dividends that are being paid off. Share capital, how do I arrive at those figures? Let me share the screen as well. We are interested in share capital under financing activities. Share capital, share premium, all those things we're coming to bring them there. Share capital, there's an increase, right? 11 to 12. An increase of 100 kwacha. An increase in share capital is actually an addition in cash. Then people are investing in your company and receiving cash. So we'll keep that figure positive. Share premium is equal to financing, okay, benefits. So you get to also include it. This from 14 to 16. What's that? An increase, 200 increase. You have to record that positive 200. What else do we have? Specifically, we look at we are looking for any loans, by the way, if we have, because those things feature under financing. I do not see any loans. So what I'm just showing you are the main things which are in the cash flow: share capital, loans, dividends, payout under financing. These are the things that you just have to put. Those are just as per format, okay? And I can't see loans. And finally, we just check for one more: dividends paid. Were there any dividends paid? Well, they're there. Dividends of 250 were paid during the year to 31st October 2011. Okay, this is our financial period, and they've paid 250. We have to come and record this figure. What are dividends? They are decreasing our cash because we are paying them out. So this figure will be negatives. So me, the way I was recording in my statements, you've noticed I was debasing some of those last zeros, just like they've done in their formats here. Okay, like those zeros that are being debased on top there on the K. Yeah, so what I've just showed you is these are the formats. So things like sales, cost of sales, those do not feature in your cash flow. Okay, what I've shown you in this format and what I've talked about in this video, and even part 1 of the cash flow video, has just shown you all the things that you need. So let me show you the inputs of all those figures under financing. So that's how I got my share capital, 100. As I said, I was just debasing some last figures, of course. We keep it positive. Premium, 200 increase. We keep it positive. Premium these are benefits. These are like profits that we get from sale of an asset. Those are premiums. Sale of shares, actually. So those are increase in cash, we keep them positive. One more, dividends that were paid. Let me show you how we record that. So dividends paid, I've recorded them there, right? In brackets. Okay, 250 in brackets. Why? That's showing negative cash. So when dividends are being paid out, cash is reducing. So when cash is reducing, we denote this by those brackets you're seeing there. And then I summed up everything in the financing activities. That was 100 from share capital, a 200 from share premium, minus this 250. I got a 50 actually. And that 50 was positive. What do I do with that 50? The 50 has to be added up from the net cash that you got after summing up all your investing and your previous operating total. Okay, that was, I think, negative 444 if you find in the video, which I get to add to this. So this one is positive, negative 444 plus 50, giving you 394 as a decrease in cash. It's in negative. It has shown you negative cash, and this is the final figure that you end within your cash flow. What does that show you? It's a decrease in cash, right? This figure we get to prove it with our cash and cash equivalents. Please, if you get back to part 1 of this cash flow video, we had found the cash and cash equivalents at the beginning of that video. We found negative 394 under that movement, the cash movement, showing us that there was actually a decrease in cash over the financial period. And we have proved through those various entries that for sure there was a negative 394 from what we're getting at the end of our cash flow, that we had a decrease in cash. And that's your current status, your liquidity status as a company. Then you just wrap up your cash flow by, of course, adding back cash and cash equivalents at the beginning. What does that mean? I'll just share that screen on how we got that total, and then cash and cash equivalents at the end, and then of course at the end the fact which will close off your cash flow statements as 153 in brackets. So let me just show you that. So this is what I was talking about, that figure from our movements, 394, right? They've actually tied same figure as what we've ended up with in our cash flow, right? So that just gets to show you what, that we have obviously balanced our cash flow. That's one, and we have proven that for sure there was a decrease in cash, because when you see negative, then for sure there was a decrease in cash. What do I mean by cash and cash equivalents at the beginning? Well, what they mean is just like you sum up all those totals in that opening balance column, it gives you still 241, right? Closing balance there under the CO column, that's your closing, that's cash and cash equivalents at the end. That's what that means. It gives you negative 153. So these are the things that you come to write off after, of course, finding your last total, which is it could be either a decrease in cash which we got like 394, or maybe an increase in that case, but we had a decrease of 394. Then after you find that, then you just come to add on those things like cash and cash equivalents at the beginning, which is just a total of everything in that opening column, and then you come and that opening balance of cash and cash equivalents, which is of 241, you get to add it to your assets, your final total that you ended up with, which was a decrease in cash, and I landed with the cash and cash equivalents at the end, which should land you to 153. Okay, which is just a summation of everything in the CL column. But the main part of balancing is when you match your cash equivalents with the final total that you get after obviously computing your financing activities. And that's it on your cash flow statements. Comment on the status of this company. Well, you've just seen the movement there, negative cash. What does that mean? Well, this company is obviously in problems. They have liquidity issues from just what you can see. This is just going to be just a brief comment. Of course, we can do our further research, but mainly from what you can just see is that the company's liquidity position is not okay currently. Yeah, so this was the video on IS7 cash flows. Hopefully this will be of help and some recap, of course, from your financial accounting, as you've been doing this in your financial reporting.